Okay, I feel like that's enough time. Again, people will get into it. We'll start off with the introduction. You'll get caught up. And again, thank you everyone for joining this Placer AI webinar 2022 Early Lessons and Expectations. We're going to start like we always do with a very quick introduction to Placer data, just for those of you who are new and aren't kind of familiar with what we do and how we do it, so you have a sense of the data you're going to be seeing. We're going to then look briefly at like the latest data, things we've already seen in early January. And then we're going to move on to our 2022 expectations. And as always, we are going to make sure we leave time for Q&A. If at any point throughout the webinar you have a question, just hit the Q&A button at the top or bottom of your screen, depending on how you have it situated, and we will attempt to get to it either within the flow of the conversation or at the end. I am very excited today to be joined by someone who I've been following for a very long time and learning a tremendous amount from. Jason Goldberg, Chief Commerce Strategy Officer at Publicis and the Retail Geek. Jason, thank you so much for being here.
Oh my gosh, thanks so much for having me, Ethan. I just want to make sure there's no funny business with Photoshop. Is my face 3 times as wide as yours?
No, I do that to make myself to try and slim it down to make myself feel better, but I appreciate you playing along with us. Yeah,
I feel like you are better looking than me, but it's even exacerbated in the headshots. Yeah.
If I knew you were going to compliment my looks, you would be on every single week. So a quick introduction to Placer data before we dive in. What is the data you're going to see today? So Placer observes a panel of over 30 million devices throughout the US. Very critically, this is all anonymized aggregate data. So we are GDPR and CCPA compliant. We then utilize that data as a panel upon which to run AI and machine learning algorithms to make estimations on foot traffic to retail locations throughout the United States. And we present that data in a wealth of different reports within our platform on everything from visit counts, true trade areas, the customer journey, void analysis, cross-shopping, and a whole lot more. If anyone is interested, we have a free section on our website called The Square. It has a whole bunch of free tools that you can utilize. We also have a free version of our premium product that you can sign up for at placer.ai. That was the kind of the rapid intro, and I feel like we're getting that time down every single one, and I'm excited about it. But now into the data itself and the kind of the content that we're all here for, right? So I wanted to start by looking at what we've seen early on in the year. And we saw a really interesting holiday season, obviously, the extended holiday season, the demise of, so to speak, of Black Friday, Super Saturday. Yet we did see some retailers do pretty darn well in that kind of post-Christmas period. So we're looking at weeks November 15th through December 26th versus December 27th through January 9th. We see Target doing much better. We see Best Buy doing much better. Dick's doing much better. Jason, what do we learn from the success that some retailers have seen in this early part of the year? And what do you think it might tell us about the current retail environment?
I can't help but thinking it would be even better were it not for the Omicron variant sort of rearing its head at the end of December. Because my big takeaway from your data set and affirmed by sort of other feedback I've gotten from retail clients is people want to go to retail stores. The brick and mortar is still very important, and there's a significant amount of pent up demand to visit stores, and disproportionately to visit stores that offer a differentiated experience, right? So if you kind of think of the 2 buckets of retail, that there's, retail that's about highly efficient fulfillment of goods versus product discovery and experiential retail. The product discovery and experiential retail like really seemed to be getting its mojo back, hampered only by a new variant scaring some folks into staying home.
That's such a good point. I think that product discovery component is so important, and it's so often overlooked. We are on in terms of understanding why are so many kind of digitally native brands coming to retail? Why are so many product-oriented brands expanding their own retail presence? So much of it is for discovery, brand experience, and more. And it's such an important element to kind of hit on of why physical retail still has this draw. Looking back a little bit further, we saw a really interesting holiday season. What for you was the biggest takeaway from the holidays in 2021?
Yeah, well, my biggest takeaway overall, I'm always interested when there's a abnormal holiday, there's an opportunity to learn something, right? And we tend to kind of repeat the same playbook over and over again in retail. And part of that around holiday is heavy discounts to drive shopping activity. And for a variety of factors, there was not as much of an incentive to offer deep discounts this holiday season. And side note, it was the best holiday season for retail overall in 30 years, right? And so I'm going to be fascinated. Will retailers take that lesson, and will we, like, there were still discounts and promotions, but they were less deep. Will we see less deep promotions next year, or will we fall back into our old habits and arms races and kind of, trying to beat each other in a race to the bottom? I think is going to be super interesting. And then I think that's my main takeaway. A side note, I was a little surprised. I kind of expected the other thing that would change is the shape of the holiday season would change dramatically. Most notably that those big tentpole days would be less important. And I think that has borne out, and we'll probably talk a little bit about that. But I actually thought retailers were working really hard to pull more traffic into October and kind of flatten out the whole holiday period. And I would say that didn't work as well as I expected it to. I was talking a lot about how I thought that's how it would play out, and the data hasn't really borne that out. October this year was not really bigger than October last year.
I mean, that's very, very interesting. And I think the point of the kind of the deal busters is the primary kind of pull into a location. I wonder if even last year as well, it was a really significant piece of the puzzle. And you kind of hope that retailers have come to realize it's not just about slashing the price. It's about providing someone with the brand, the experience, the products that they're going to fall in love with. I wonder, one of the sectors that we've been kind of really fascinated by has been like the fitness sector in general. I think that only gets more exciting with, all of kind of the buzz around, Peloton is the darling, Peloton is the worst. No one's ever going to go back to gyms. Everyone's going back to gyms. And I think this kind of the shifts we've seen between those two narratives, I think that the sector has been overall, especially when you think of brick and mortar, pretty darn impressive considering how difficult the challenges have been that it's faced. I think when you consider the fact that how important Q1 is, the nature of the unique challenges that it's facing for this segment, has it changed the way you view fitness in any way, or your perspective on how it'll perform throughout the rest of this year?
Yeah, so I guess I fall slightly on the cynical side. So when this pandemic kicked in, if I could have been a retailer with a good inventory of home fitness equipment, sign me up, right? Like obviously, huge benefit to those that could sell home fitness, and super challenging for those that were selling fitness as a service via like a gym. But there was all this talk about like, man, this is going to be a permanent change in behavior. Everyone's buying a Peloton, and they're never going back to the gym. And side note, like that's what my family did. But what I chuckle at is there is almost no consumer category that has less long-term trends and is less long-term sticky than the fitness industry. So like saying that because we were forced to change our behavior during a pandemic, that behavior is going to be permanent is kind of like saying the fitness industry is going to be the biggest industry in the world because everyone has a January resolution to go to the gym, right? Like we all have the best intentions around the fitness industry, and we all rarely live up to those expectations. So I do think there is a lot of pent up demand to go back to gyms. Like, I think it's a matter of if not, or when, not if. And I think the big advantage that Peloton thought they would have, and I would argue they did have, is the CapEx investment. That because they're an expensive piece of home equipment, you're more likely to stick with it for longer because you want to get your opportunity cost out of that investment. And then a common theme we're seeing across all these topics is people are getting wrapped around the axle of comps versus absolute performance, right? And a lot of the current negativity around Peloton is related to comps. If I went into a time machine and went back to 2017 and said, hey, Peloton could have this many active monthly users in 2022 that are paying this amount of money, would you be happy with that business? Pretty sure every investor in Peloton would say, I would be thrilled with that business. But now, when they're looking at comps versus growth rate during the pandemic, like it suddenly feels like the sky is falling.
It's such an important point, and it leads really nicely into kind of the looking forward component of this webinar. One of the trends that we've talked about quite a lot is this idea of like regression, right? Regression can be obviously positive, but it's to the mean, right? So where things were before. So home improvement, Home Depot and Lowe's were down year over year in visits. That's not because they were worse off. It's because they saw such a surge in 2020. It was almost impossible to maintain. I think it's a similar point about Peloton. I wonder, I'll bring this into two questions. We'll start with this. Which retail trend do you think is the most significant in 2022 and why?
Yeah, well, so it's a boring one, but digital acceleration, right? Like, it's super unshocking or controversial, but like, digital was already the fastest growing category of retail if you treat it as a category. And by that, I don't necessarily even mean digital sales. I mean digital as an important element of the path to purchase. And so all of those digital things got accelerated. You used to test drive 3 cars, and now you do your car research online. Like that, those behaviors are not going to revert. People that learned how to get diapers online when their kid isn't sleeping are not going to suddenly drive to the grocery store at 3 a.m. to get groceries. Like that's a permanent change in consumer behavior. So I do think every retailer thinking about the digital impact on their business is a huge trend. But I think it's a mistake to say, oh, what that means is e-commerce and people aren't going to the stores. It means a lot of the stores that we invent going forward and remodeled have to be more digitally native. So we're seeing, the Targets and Walmarts of the world redesign the parking lots around curbside pickup. We're seeing Amazon and Nike and Dick's Sporting Goods inventing new stores that expect you to use your phone in the store while you're shopping, stuff like that.
I think it's such an important distinction that so often gets missed in this idea of digital adoption. In many cases, we talked about over a year ago, but you think about kind of the poster child for who we got wrong was like Burlington, right? Burlington was someone we were all kind of, not all of us, but some of us were trashing in February of 2020. They're getting rid of their e-commerce site. Good luck, Burlington. And yet they did incredibly well. And then was a specific thing. But
that was me. I was wrong.
But you know what? I think the question is, what's Burlington's digital? I think Burlington attempting to copy Macy's or someone else is a mistake. But Burlington asking, how do I use digital as a mechanism to augment the experience that I provide? That's the exact type of thinking that they need. I think a more nuanced and sophisticated understanding of digital as a supporting element to a wider strategy is very often what's missing.
Yeah, no, I couldn't agree more. I was bashing Burlington in February. I'm like, turning off your e-commerce site like a month before a pandemic when everyone is only shopping via e-commerce probably didn't make a lot of sense. And their financial performance makes me look like a complete and utter idiot. So congratulations to Burlington. It probably doesn't help you, but I'm glad to be wrong. But I'm with you. Like I would still argue that Burlington has some work to do in their digital experience and need to invent the right digital experience, and the customer expectations around their digital experience are only escalating. But their digital experience is not going to be a catalog site that competes with Macy's, right? Like it's going to be something very different and probably tied to that highly dynamic, highly perishable inventory and the sort of thrill of discovery that Burlington has that probably needs a different kind of digital experience.
Yeah, I think you're dead on. I wonder if is there a trend that you expected that you were like kind of high on that you no longer believe in heading into this year?
So there's a bunch. I did think that the advent of digital was going it was fundamentally grocery was one that was super interesting to me, that like no one was going to restaurants, so they were going to grocery stores more. I thought grocery stores would lock in more of those calories permanently. And you know, grocery stores definitely had a moment during the pandemic, but like net less of one than we would have thought. I want to say all of retail over the last 2 years grew 22%, and grocery only grew 18%. So I think grocery became a lot more digital as a result of the pandemic, but grocery didn't become way bigger as a result of the pandemic, as I expected they might. So I guess that's one.
That's a good one.
Okay.
Omnichannel is, you know, we're kind of talking about this already, but do you think, is there a best way for retailers to maximize omnichannel?
I'm not sure there's a single size fits all, like what omnichannel means to different customers. I don't care what it means to a retailer, but what it means to different customers, and what their expectations are is probably rapidly evolving. You know, the problem with the word, and it's just semantics, is it has exactly the wrong word in it. It has channel, right? And no customer has ever shopped at a channel. Customers shop at Best Buy, right? Like, and they don't differentiate the experience they have on the mobile app from the experience they have in the parking lot from the experience they have at the point of sale at Best Buy. And so, you know, good retailers are thinking about that cohesive customer experience across all those potential touch points, which are, by the way, rapidly expanding with the metaverse and social commerce and all these other things. They are all touch points on this, you know, single path to purchase. And you know, I think customer expectations are around how seamless all those touch points fit together, and how they you know, best make it easier for the customer to live better, and less about, you know, where they are or what, you know, channel label they get in or who gets sales credit for their purchases.
It's a great point. And like a shout out to our friend Steve Dennis, who talks about harmonized retail, which I think
well, he's your friend. I know him, but I don't really like him. But I'm just kidding, Steve. I love you, man.
Yeah. But I think I do think there is kind of that is a very important point of like, you know, again, who are we interacting with? Sometimes we have a tendency to get things technical, and that's not how a consumer approaches it. I wonder, I think this is kind of the question du jour at the moment. How do you perceive the decision by some retailers to split their online and offline channels?
Potentially the stupidest decision like I've ever heard of in my 30-year retail career. And I'll say that with one caveat. It depends on where you're sitting. So if you're an investor in a failing investment that you just need to liquidate and get the maximum value out of it you possibly can, right? Like there comes a point when you sell the desks from the corporate headquarters. And someone goes, well, wait, they're not going to be very efficient in the corporate headquarters without the desk. And you go, yeah, but it doesn't matter if they're efficient or not. They're going out of business, and I can get some money for those desks, right? And in the same way, if you're an investor in an omni-channel retailer, and there's a moment when the market is willing to value your digital assets more than your brick and mortar assets, then yeah, you would split them off in an auction and sell, you know, all those parts for the highest price. And when you see these activist investors coming in and forcing retailers to split off their e-commerce, make no mistake, that is what you're seeing. You're seeing an investor that does not have confidence in the 20-year prospects of that investment, and they're trying to figure out the best way to get their money back, and it's to break it up into parts and charge the highest price possible for the parts. But if you're coming in it from the perspective of an operator that needs to satisfy customers, or you're coming at it from the perspective of a customer that needs to fulfill a need, splitting these off as separate entities is incredibly stupid. Like all these retailers, you know, they often set up their e-commerce sites thousands of miles away from their brick and mortar sites, and they're horribly siloed, even when they're on the same P&L and report to the same CEO. And then when you know, they're way too siloed and talk about us and them and all these things. And so then when you like make them two separate legal entities that, you know, have a contract to partner on a few things, like it's hopeless that you're going to provide a great customer experience.
I couldn't agree more, and I think that might be the best I've heard this idea articulated. But I think potentially the stupidest decision in my 30-year career in retail is my favorite quote of any webinar we've done in the last 2 years.
And to be clear, I have made a lot of stupid decisions in my 30-year career, so that's not hyperbole.
That, I mean, I very much agree with you. I think that was the best way of articulating it. I don't think we appreciate the frictions that are created in an organization when you separate it, and how hard collaboration is. And even we all know how difficult it is to work together with people in an organization. Now splitting things up just seems not the smartest idea. Shifting to a little bit more of a positive take, I would love to hear a retailer that you think is going to win in 2022, and I'd love to understand why you think that retailer is going to do so.
Yeah, well, you've got the off-price category up on the screen, and like, salt in the wounds. I think Burlington is doing pretty well. Like, you know, in spite of the fact that I might have bet against them versus some of their off-price competitors, but before the pandemic. Like on this chart, like, you know, the one that stands out the most is Home Goods, and it's I would argue it's because they've got double tailwinds. They've got the off-price component, but they're also more focused on home than apparel. And of course, the pandemic was a lot more friendly to home. I am saddened. You know, I think we've got some looming problems on the horizon in terms of the economy. I think there's this is going to make Steve Dennis super happy, but there's a severe bifurcation of the economy. The wealthy and high wage earners are doing phenomenally well, and you know, you're seeing luxury, you know, go to the moon. And the low wage earners are you know, really struggling, and that struggle gets hidden in these industry averages a lot. And so I do think, you know, 2022 and 2023, I think early in the pandemic, we were talking about these years potentially being the roaring 20s, and this, like, you know, frivolous spending with all this economic stimulus that would happen, you know, once we cured the pandemic in a year. And it just hasn't played out that way. We've kind of burned through most of that economic stimulus. You know, we've had all these starts and stops, and I'm worried we're going to roll into, you know, a pretty severe belt tightening period for a good swath of the U.S. economy, and that, of course, you know, is helpful to the off-price retailers and the value-oriented retailers.
Yeah, I mean, it's not necessarily the most optimistic of views, but
I know you said optimistic, and then I totally blew it.
No, I love it. I think it's important. And then I think even more, I think the idea of kind of these multiple tailwinds at once. I think this idea of, when we think about the holidays, of, you know, it's not COVID, it's not labor shortages, it's not supply chain challenges, it's all of them coming together. And I think when you look at the retailers who you have good feelings about, it's generally that same combination of forces all at the same time that drives a lot of interest. As you know, the bifurcation is one of the few areas where I remain unconvinced that it is. I have this thesis that the biggest opportunity sits in the middle, but it is an area that one day Steve Dennis and I will have our kind of retail fight club about, like, whether, because I think it always depends on what you define as value. So when you define, you know, Target as a value retailer, then yes. When you define Target as the middle, then no. But that's a separate debate. Moving to a good
one, by the way. I like that. I'm gonna follow it.
Yeah, I think it's one of the areas that you know, that, like, I think it's interesting and potentially slightly oversimplified. But I think one, I'd love to hear, you know, we did the retailer itself, and you can't choose off price, so you have to choose something else now. But if there's a retail segment you feel especially good about, what would it be and why?
Well, so some people don't think of this as a retail segment. In my world, it certainly is. Automotive, I think, is an awesome one. Again, you talk about tailwinds. They have all the tailwinds. We talked about, like, the high wage earners doing well. Like, so there's, you know, a bunch of people willing to spend money on luxury vehicles. It's really hard to make a luxury vehicle right now, so there's a constrained inventory, so they're getting to charge a fortune for them. And the pandemic disrupted the usual 3-tier distribution model for for automobiles. So people may not like totally realize this, but manufacturers sell cars to dealers and who are all franchisees, and those dealers sell cars to people. In the pandemic, people, manufacturers learned that people wanted to buy cars from manufacturers. And so I think it didn't happen yet, but the very beginning of this kind of direct to consumer movement for cars is probably going to happen, accelerated as a result of the pandemic. Tesla being the kind of, cornerstone example. And so I just think those are all super favorable things for automobile. People are shopping different. They're more willing to buy direct. They're spending a bunch of money, and nobody has to give away any discounts.
That's a fantastic point. Even like you think of the accessory side of the automotive, you haven't taken your car in for a tune-up in a year because you weren't driving as much. That kind of pent-up demand, or is going to have a really significant impact. It's a great point. It's not one we've heard before. I like it.
Yeah, almost all the advice I give you should take with a wild grain of salt. But the thing that'll make this webinar worth it is if you buy a new car and trade in your old car, do not use the Blue Book value for your used car. Your used car is way more valuable right now than any published thing. So make sure you get commensurate value for your trade-in. The dealers are making a fortune on that right now.
Ooh, very, very good point. And you're welcome, audience, for that one. In Jason's name. Work from home. This is one of the topics that I'm really fascinated by. I wonder, do you think, one, that hybrid work is a long-lasting phenomenon? And two, how do you think retailers should adjust, or should they?
Yeah, so I think this is a huge deal. I'm somewhat hesitant because I know this webinar is being recorded, so I feel like when I'm wrong, this is going to get played back to make fun of me later. I do think the changes to work are permanent. Like, I'm not saying they permanently will feel like they will now, but like if you look at the macro stats and you say 85% of the workforce worked in an office 5 days a week. And at the moment, 15% of the workforce is in an office 5 days a week. We're never going back to 85. And even a partial permanent shift in the days worked fundamentally changes the demographics of the U.S. geography, right? And if you had your stores located in the right spots, if you're Obo Pan and you had a delicious, fast, affordable lunch located in close proximity to where everyone was working before the pandemic, then you are not in the right spot for after the pandemic, right? And so, a brick and mortar retail mentor of mine early in my career, Wayne Huizinga, who founded Blockbuster and AutoNation and some others, he used to always say, a sign of a healthy retailer is one that's always closing and opening a significant portion of the stores, because the U.S. population isn't static, it's migrating, and you need to be, always cultivating your store fleet to match the population. And so, this has been kind of an ice age watershed moment in population shifts that retailers need to be accommodating.
I mean, I think it's a very, very important point. I think the interesting thing that we're looking out at is this a shift away from, right now the employee is in a very privileged position. There's a lot of demand and there's not enough people. If there's some sort of economic challenge, does that power balance shift, and what does that mean to work from home? I agree with you though completely that even a small shift will have major consequences. And perhaps even most importantly, I can't name the restaurant chain that you just said because I can't pronounce it well. So that is a bigger issue. But
Panera Grill.
Yeah, that's much better. Also,
Yeah.
Wayne Huizinga was the owner of the Miami Dolphins for a long time. And
yeah, I used to have easy access to tickets for a while.
See, that's what I need, because I'm a lifelong Dolphins fan. But moving on, I am going. This is maybe my favorite question that we ask, and we don't ask it often enough. But I'm going to make you. You're welcome. CEO for the day of any retail or brick and mortar entity that you would want to choose, and you have to make one big decision. What is the company? What is the decision, and why?
This is like such a Sophie's choice for me, because there are so many retailers that I want to go make one dramatic change. Most of them are clients that would fire me if they heard the advice, so I got to be a little careful. But I'm going to go with a close cousin to one that we talked about. So like in a way, I desperately would like to jump into the chair at Burlington and figure out what digital should look like for Burlington. But I actually think there's an even better version of Burlington, a retailer that's worse at digital and more financially successful in spite of it, that has, you know, more opportunity if they could figure out digital. And that is my friends at Costco. I feel like if I had one day in the CEO seat, I would stand up a digital tiger team to figure out what digital should look like, in the store, and in the consideration cycle for Costco. And I think there'd be a lot of money to be made doing that.
You know, it's interesting, Jason. That is first of all, you are 100% right. That is a great answer. When I worked at a digital intelligence company before this, and one of the most fascinating things was Costco Travel was one of the fastest growing travel sites on the internet that year. And the only source of traffic was referral traffic from Costco.com, meaning they were doing nothing on the digital side. It was just people loving Costco. They are, you're right, a strong digital team away from exploding into into that rarefied Target, Walmart level of retail.
Yeah. Ethan, you brought up a sports reference earlier. So like back in the day, the Chicago Bulls, Dennis Rodman, you know, the enforcer for the Bulls, a wacky guy, but an amazing athlete. The one thing he hated to do was score. Like he wanted to be known for defense. So a few times in his career, he got fouled and he was forced to shoot free throws. And when he would make a free throw and get a point, you could actually see a look of disgust on his face. Like he was super mad that he was like getting points. And Costco's a top 10 e-commerce site in the United States of America. They sell like $4 billion online. And I kind of feel like they're the Dennis Rodman of e-commerce. That like, they're kind of disgusted that they make that much money online.
I thought your quote on the split of online offline was going to be the best thing said in this webinar, but Costco is the Dennis Rodman of retail is one of the great calls. I haven't been in this sector that long, but it is top 5 for me all time. And to conclude before we get to the questions, I want one bold prediction for the coming year.
Oh God, I should have come to the rehearsal. So I feel like the one I'm most confident in is season 5 of Cobra Kai is going to be the most watched TV series on television. Like if you haven't been watching it, it's amazing. And I'm just joking. I doubt it. I was trying to buy time while I think of something, but I'll go back. My negative prediction, I do a prediction show on the podcast. The big negative prediction, the metaverse and NFTs are not going to be a meaningful part of the economic retail picture by the end of 2022. Not saying people shouldn't pay attention to it, but it's early in the hype cycle for those products. And I guess one of the things I'm really watching is we talked about it early on, but I think digital in store is going to be a much bigger deal than people realize, and how we use our phone in brick and mortar stores by December of 22 is going to feel an awful lot different than how we use our phones in 2019 in a store.
Do you think it's going to be more kind of, if you look at places like China where it's very like kind of QR code based and interactive through those channels, how do you see that kind of evolving?
So I think there are going to be multiple elements. I do think the QR codes are one, right? And QR codes have had, some ebbs and flows in the US, but of course the pandemic taught everyone how to use QR codes quite proficiently. But I'm less interested in the activation. I think there are stores that'll use NFC. There are stores that'll use micro geolocation. There are all these different methodologies. But I do think when you shop online, the most important attribute to you, the thing that most correlates with sales, are ratings and reviews. But for the 84% of all retail sales in the United States of America that happen in a brick and mortar store, you know what there are not?
Reviews.
Ratings and reviews. And so I think via a variety of different methodologies, you're going to see retailers figure out how to offer social proof how to, give shoppers ratings and reviews while they're making purchase decisions in a brick and mortar store. And to me, the smart money is that will mostly happen on the phone. I think it'll be different in different stores.
Yeah, I mean, I will kind of very kind of I'll give this. I think you are maybe the most advanced thinker when it comes to understanding what digital's impact is on retail in the current environment. I think far too many people look at something exciting and just try to copy and paste it and say, works in this sector to work here, or works in this area will work there. I think your kind of analysis of the digital impact on retail, both in your writing, on your podcast, elsewhere, you're here today, it's just it's I can't recommend enough that people kind of follow you in all of the channels you write to, because it's certainly informed my opinion a lot over time, and it was that's just another great example. I want to get to we're running a little tight. I want to get to a couple of questions that came in. One came in about the kind of grocery versus dining and what that interplay will be. So I'd love your take on that. How do you see that?
I saw that. I love that question because it's rare that someone asks me a question that I follow closely. So 10 years before the pandemic, very interesting. Restaurants and grocery stores split calories budget 50-50. So half your stomach calories came from grocery stores, half came from restaurants. Then, very predictably, the pandemic hit. 70% of your calories came from grocery stores, 30% from restaurants. A lot of people are surprised you still bought 30% from restaurants. That was obviously all the DoorDashes and pizza deliveries during the pandemic. And then slowly, as the pandemic went along, those numbers started to converge. And the magic question was, would they ever come back to 50-50, or would there be a new normal that maybe had a 5 or 10% gap? And they actually did converge at the end of Q3 in 2021. And so it kind of looked like, there was pent up demand for restaurants. Restaurants were, having a pretty full recovery, but it seemed like we were going to go back to normal. And then Omicron kicked in, and I keep saying it wrong. I have a competitor that's called Omnicom, and so it's kind of funny that I mispronounce the virus after my competitor subconsciously. So in December, we saw that split between restaurants and grocery stores re-exacerbate. And so I think it's going to be that's going to be an interesting trend to watch in 2022, is that kind of the dead cat bounce and the pandemic goes away and they flatten right back to 50-50. The grocery stores are spending a lot of money to remind you how much better the food you get from the grocery store is. So they're desperately trying to lock in, an extra 5 or 10% share. We'll see how it works.
That's super interesting. I think a lot of it's going to come down to how sticky is that cooking at home trend. We have another question came in. Also, I saw someone raise their hand. If you just plug the question into the Q&A button, that's the best way to get that question to us. So Jake says, how do you foresee consumer demand and customer expectations within the furniture industry faring the next 2 years?
So furniture is a fascinating category in general. And then during the pandemic, I think it's going to be one of these categories that does very well, but suffers a little bit from comps. And so, they had such an anomaly, if you think about it, people couldn't spend money on experiences, so they didn't take a vacation. So what did we do instead of a vacation? We improved our home, right? And often that involved buying patio furniture. And so the furniture industry definitely had a moment in the pandemic. And the one mitigating factor was there was not enough capacity to make all the furniture that people wanted to buy. So if you wanted to buy, furniture from China, it all got stuck off a boat off the coast of Long Beach. If you wanted to buy American furniture, all these orders flooded into all these furniture makers in North Carolina, and they couldn't hire enough people to make all that furniture. So I do think 2022 is going to be a little bit of a catch-up year where that supply chain catches up a little bit and that demand gets fulfilled. And then 2023, 24 could be, I think they're going to be healthy, robust years that are going to grow from 2022, but may not look awesome from a comps perspective. And so, just going to depend on how savvy and patient the investors in that category are.
Savvy and patience, two of the harder to find things. And with that,
I have neither.
I think sadly neither do I. But Jason, thank you so much for joining us. It was such a pleasure having you finally. Really appreciate your time, your insights, your expertise. Everyone, I can't recommend it enough. Following Jason on LinkedIn, following his work. He writes for Forbes, following him on Twitter as well. I'm a longtime follower and I really appreciate it. And well done, sir. And Jason, thank you so much for being here. Everyone, thank you so much for joining us. And we're doing it a little tighter than we normally would. Usually there's a 2-week gap between, but because of NRF, we are doing our next conversation already on next Tuesday. We're going to be focusing on omnichannel, a whole deep dive into omnichannel. So please join us for that. Thank you for being here. Jason, thank you again. And I hope everyone has a wonderful day.